Alright, yo, what's good, y'all? This is Jay Devari again, coming at y'all with another video. And actually, in this video, I'm gonna be following up the video that I made yesterday about my gold forecast. And so yeah, before we get into that, I ask that you guys please subscribe to the channel, also like the video, and while you're at it, just leave a comment down in the comment section. Just to give me some feedback or do whatever. I don't care. Just talk to me, man. But other than that, I'm gonna go ahead and get into what transpired today, because today I'm going to show y'all. Today we had FOMC. Not only that, but they also we had the federal funds rate announcement. As you can see, the Fed or Jerome Powell went ahead and increased interest rates by another 0.25% basis point, right? Basis point hike. And so now basically it is more expensive to borrow money at this point in time. That's what the federal funds rate or the federal interest rates basically do. That's what that means when interest rates are rising. It's more expensive to say borrow money, or more expensive to borrow credit to like make large purchases or to carry out certain transactions if you don't have the cash on hand, right? So this is basically bad news for a lot of corporations, big corporations, large corporations, and large banks. They basically borrow and leverage the debt that they receive from like banks, and they receive from like the government. So at this point in time, based off of this, we're also not gonna. They also didn't say if they're gonna be pausing rates or not. They did not come to that decision today. So as far as today goes, with this current interest rate hike, most likely they may do another rate hike next month. But as of right now, we just have to go of like them not making a decision today. That can change later on in the month, because they can most definitely come back and talk about this in like another meeting, or another press conference. They can talk about this in another press conference. But as of right now, they have not came to any decisions on whether they're gonna raise basically pause rate hikes, right? So with that being said, I guess you could say we could see more, we could probably see like more larger banks having to close down or having to get bought out. Like JP Morgan Chase had to buy out First Republican Bank a couple days ago, right? Because they went under, right? So JP Morgan Chase basically had to come in and bail them out. So that's another large institution that basically failed, or got basically failed. Had to get bailed out. So now those depositors become affiliated with JP Morgan Chase now. Right? So yeah, man, it's gonna be some troubling times ahead. Nobody really knows what's gonna go on, what's gonna happen. The Fed is very dead set on getting back to the inflation rate of 2%. They normally want to keep inflation between 1% and 2%, and as of right now, I think we sit at about 6% of the inflation rate. We sit at about like 6%, so we're still 4% over that ideal threshold that they want to keep it under, or keep it at. And he, like, throughout the past 2 years since COVID, Jerome Powell has really put an emphasis that him and his people, they are dead set and dead focused on getting inflation back to 2%. Right? So it's like, I don't see them pivoting, even amidst all of like the bank crisis. Your president Joe Biden got up there and said there's nothing to worry about with the banking sector, but yet more major banking institutions are failing and having to get bailed out, right? So that's something that they're going to need to address. They may potentially look at tackling both inflation and tackling the banking crisis at the same time, right? So either way you look at it, because they can pause rates and then try to focus on the banking sector, but they still have inflation to worry about, right? Or they can tackle inflation, and while they're raising interest rates, more major institutions can fail. So it's like the Fed is stuck in between a rock and a hard place, right? So yeah. So get back to the charts. So yesterday, gold was actually trading at around this range right here. On Tuesday, there was on Tuesday we was in this little hourly range right here. I actually did end up. I set up a trade idea within this little hourly range that I have marked right here. I set up a trade idea. However, I didn't get triggered into it for whatever reason. Like on my challenge account, it didn't get filled in basically. So basically, I didn't make any money on on the idea that I had set up in here. Um, but I'm not too bummed out about it. It's all right. It's not really anything to trip about. This is the idea I had right here. You see, came down, and got triggered in, and then I actually ended up like winning. Well, the trade idea actually ended up panning out, but then selling off afterwards after running this high of the day right here, where I actually ended up triggering right here, and just ended up rallying all the way up higher, right, to hit the TP. I wish I would have got triggered in, but hey, what can you do? So yeah, it took out the high of the day. That was Tuesday yesterday. It ran that high, and then we throughout the rest of the Asian session and then into London session, basically price went ahead and took the sell side liquidity, or the low of the day that was formed. You see right here, the low of the day of yesterday was already ran, and so now you can see that we were making, basically the market was heading higher to take out the high of the day, right? So in Asia, they normally form the new high and the new low of the day. And normally whichever one of these is formed first, that's when they generally try to make the low of the day, especially when it comes to news events that say trigger some crazy price action. And today, with the Fed fund rates and the FOMC statement today, and then raising interest rates today, that was the perfect catalyst to say cause this price action, because they want to factor this in. So what I said what I forecasted to happen in the previous video of them say heading lower, probably taking out some lows in this range right here, probably running the low in this range, and then eventually heading higher, especially running up to the FOMC Fed rate height around 2 o'clock, which is, I'm gonna go ahead and mark that now, which is, you can see at around, say, 1400, so 2 o'clock in the military time, around 1400 hours. As you can see right here, 2 o'clock, we went ahead. Look at that crazy, look at that, at 2 o'clock, right? 2 o'clock, they raised interest rates. Look what happens to gold. It just rallies for like the next 3 minutes, just rallies higher and higher. But for the next 2 to 3 minutes, just rallies higher, and then we start heading lower. This is why you don't want to be trading during the exact time of these events, because you never know like what's gonna happen. Like it could have opened and headed lower, right? But given that gold tends to have an inverse correlation with interest rates, right? So if interest rates are rising, the price of gold tends to go up, because gold is seen as a hedge against inflation. So if interest rates are rising, gold tends to go up in value. If interest rates are lowering, gold tends to fall in value, right? Because with lower interest rates, it's cheaper to borrow money. It's cheaper to say get a loan and pay low interest on it. So people are more incentivized to actually use credit, right, and take loans out, versus when interest rates are high, people are more incentivized to say either save, or say either use cash for their purchases, or invest into things that actually say are safer investments during times like this, right? That's why you see a lot of stocks being bought up. That's why you see a lot of stocks being bought up. Some people are still getting involved in real estate. The investors that can afford to, they're just trying to get creative with their financing in the real estate market. But as you can see right here, 2 o'clock, went ahead and rallied. And this was the area of interest that I had marked up on the hourly time frame, because right here is a 1 hour fair value gap right here, right? This was an area of interest that I had marked out, right? This 1 hour fair value gap. Initially, I was wanting to see, say, a reaction lower, which initially it did, right? It went ahead and headed higher, and then came lower within that 1 hour, candle from 2 o'clock to 3 o'clock. We headed lower for a little bit, but then we went ahead and started rallying again, because right here, this hourly range, effectively, you can technically see this as sell side liquidity right here, and that's what happened. It got ran right here, and now we have this high to take out. So it took out this high on the buy side, right? And so basically, you can look at this as a impulse move higher. So any retracement we see lower into this range, we should really anticipate higher prices, or say like another a bounce leg higher, right? Because we took out the high and created an impulse move that took out the high and basically left this large range right here, right? So if I were to take the fib and go from the low to the high, right? As you can see, we tap into that equilibrium right here from these price measurements. I'm trying to get it as accurate as I can. All right, but you see we tap into the equilibrium right here, and then also we tap into the 618 right here. And also what's resting right here is a what's also resting right here is a breaker block, right? This is a breaker right here. If I go ahead and use the entire range of the candles, right? The reason why I'm using this as the breaker block is because this is the last up candle. This is the last up candle before the impulse move, or you can also use the down candle right here. This is the last down candle, right? The highest bearish candle before the large impulse move up, right? So this is why we're using this as a bullish breaker, right? Which as you can see, right, price came down. Right, price came down, tapped into it, tapped in, it nearly hit the opening price right here. As you can see, it doesn't really hit it for the tick, but it's still damn near pretty accurate, right? So it came here and then just headed higher. So now it really ran through this fair value gap, this 1 hour fair value gap that I had marked up right here. As you can see, this is that 1 hour fair value gap. I marked it with this golden zone right here, right? So now any retracement that comes back down to this, what would have been a bearish for fair value gap, now I'm looking at this as a area of support, right? So if we come back down here, now I'm looking to say trade in the opposite direction, or trade with a higher impulse move higher, right? Because that's one thing that ICT taught us. He said that fair value gaps that get, say, purged or like ran through, right, you can still use these areas as like true support and resistance, right? So that's how I'm going to be treating this fair value gap right here. And as a matter of fact, I low-key want to go ahead and just say mark this. I'm gonna go ahead and mark this as say actually, I'm gonna do it on the rectangle right here. I'm gonna go ahead and say we're just gonna call it a resistance gap, just for fun. This isn't a real term or anything like that. I'm just doing this like just for fun. We're gonna call it a resistance gap. And that's how we're gonna do it. Resistance gap. Actually, no, this wouldn't be resistance. This would actually be a support gap, right? So support gap. We're gonna put LOL just to highlight that we're joking, right? Because this isn't an actual term. I might start doing it. I mean, hey, if ICT ever watches this video, there you go, support gap, LOL. But as you can see right here, so now we have two failure gaps that have been left right here, because also too at this 2048 level right here, 770 level, we actually ran a daily buy side liquidity zone right here. So we can't really say what's gonna happen. I can't really say if we're gonna head lower and say fall back below this fair value gap. I really don't see that happening, especially with them raising interest rates now. You know, people aren't really. I think more and more people are gonna be or investors and hedge funds, banks are gonna be buying up gold, because gold has really become the hot commodity, especially during this time right now. Right, I saw an article I want to say like last week where a lot of reserve banks were actually buying up more gold reserves, you know, because they're trying to hedge against inflation, and they're trying to have something of value that'll be of value during times like this. So Really economically, everything is still in place or looking like it's in place for gold to go ahead and make new all-time highs. This buy side liquidity on the weekly time frame, or on the that I have marked on the weekly, this 2075 282 level. This is actually gold's high, like highest high, all-time high, right? And as you can see, we're pretty close to there. I think on Friday, on Friday is where we really say make a run and go ahead and set a new all-time high. And then from there, I think gold is just gonna hit higher until we get to like that say 21 to 2200 range or level. I'm pretty confident in that. Right, so that's kind of my outlook on gold right there as of now. And really, this is a follow-up video from the other day, the video that I did the other day, and kind of sort of everything has really panned out like how I said it would, or how like I thought it would, how I forecasted. As far as right now, if we don't get here Friday, right? If we don't get here Friday, at least by Thursday or Friday at the end of this week, we'll probably be there around next week, right? But we'll have to see what kind of events are on the economic calendar by then. But yeah, y'all, that's my outlook on gold currently. As you can see, we got these two fair value gaps right here. I'm gonna go ahead and mark this one because this is the closest fair value gap that we have. So if I were to take a trade, say tonight during the Asian session, I would want to see some reactions here. This is where I would want to see them, right here. So right here, this is where I want to see a reaction. We could also head lower and tap into the fair value gap that's below here, but until that happens, I think any type of move that say comes in here initially, we're gonna see a run up or some type of reaction to the higher to the upside, right? Especially on the 1 minute time frame, because it would be foolish to try to target this high up here because you don't know if it's gonna tap here and head that high, take out the high. It could say come here, range out, consolidate, and then head lower into this fair value gap, and then eventually head higher. Or you can say you just purge out both of them and come back to our support gap, LOL, and then head higher. So definitely at a time like this, you want to be, if you're a scalper, you want to be taking like little small, say just quick entries just to get like a quick, say 1 to 1 or 1 to 2. My max I want to go for is 1 to 3, but I'm currently fine with 1 to 2s at this point in time, especially because it's super volatile right now. Right, this has been a super volatile week as far as the market goes. So yeah, y'all, that's basically my forecast. And yeah, maybe we'll see higher prices and maybe we'll see a new all-time high formed at the end of this week. If not this week, retracement lower, and then we'll see that next week, and we'll see that new all-time high being formed next week. And if it is, it's gonna be a good week for gold. I'll tell you that much. So the psychological levels I have marked here is the 2100 level and the 2200 level, right? So yeah, I'll be gonna see what happens. So I'm gonna go ahead and wrap the video up here. If y'all enjoyed the video, please like and subscribe, and also remember, leave a comment down below. Just give me some feedback or just talk to me. Just say, hey, what's up? I don't really care, you know what I'm saying? But yeah, man, that being said, y'all have a good night and y'all have a good day, and have a safe and be responsible with your trading this week, the rest of the week. So this is your boy Jay Devari. Peace out.